Hey everyone, if you haven't watched my previous GME video that I put out on February 15th, I highly recommend watching that video first, as if you haven't, not much in this video will make sense. So again, if you haven't watched the previous video, you could find it on quote tweeted on my most recent tweet. I highly suggest watching that one first before watching this one. If you have watched the previous video, then let's jump into it. So in the last video, we spoke about VOX for GME. And VOX is volatility over exposure, calculates a lot of things, options, volatility, etc., but it doesn't calculate price whatsoever in its formula. And we spoke about how VOX, which was wildly erratic for the past 3 years on GME, moving up and down all over the place, has now finally consolidated and found stability. Now, the reason why this was important and in fact bullish is because stable stocks tend to do very well in the market. Stable stocks tend to rise. Unstable stocks, when we see all this erratic VOX movements, unstable stocks tend to fall. So GME in the past 3 years or so, ever since the big January move happened, has been experiencing wildly erratic VOX movements, where VOX is moving from the propagation zone, which is this lower black area, up into the inhibition zone, which is this upper area above the upper black line, and has never really spent a good time consolidating in the stability zone. So you can see here, VOX all the way spiking up high on each of these price action and each of these moves to the upside. You see some really big VOX spikes, and we also see VOX spiking down into the propagation zone. In general, a wildly erratic VOX with not much time spent coiling in the stability zone until only just recently, where VOX has now found stability, as we would say. And again, the reason why this is super important is because stable stocks tend to do well and perform well over time, while unstable stocks, which show erratic VOX movements, don't tend to perform well. Now, a recent example of a stock that had a wildly erratic VOX and then finally found stability is Run. Sunrun, don't know how many of you heard of it, but Sunrun, as you can see here, had a pretty erratic VOX moving up, down, up, down, up, down. And throughout this time, the stock had been in a steady downtrend, moving from a little over 30 over here down to $8 all the way down here. So from December 2022 to about November 2023, that entire period, we did see Sunrun get beaten down from just about over $30 to a little bit under $10. Now, recently, as you can see right here, VOX was actually able to find stability. So you could see VOX stabilizing in between the two black lines. And during that time, price was able to rise from about $8.85 all the way up to just about $14 during the time that VOX spent in stability. So you can see as VOX moved into stability and spent some time there, the stock was able to turn from a strong downtrend and start picking up speed and moving to the upside. Then, once VOX broke out into the inhibition zone, the stock was able to move all the way up until $20. So again, once VOX found stability, the stock was able to turn from a strong downtrend to start crawling up a bit higher. And once VOX moved into the inhibition zone, the stock was able to almost double in price. The reason why this is important is because right now GME is doing a very similar VOX pattern. Not comparing apples to oranges, but the pattern is clearly noticeable, where VOX is now spending a nice amount of time in the stability zone, and should VOX be able to pop up into the inhibition zone, we would expect a very strong and fast rally to the upside for GME. Now, another thing that we spoke about on Twitter was the fact that we saw a lot of dark pool buying during this recent decline. So the yellow dots represent these dots represent predominant purchasing by institutions from the market makers via dark pools. So you won't see it show up on the price right away, but when institutional purchasing from the dark pools is high, there's a 60-day associated positive price action as the market makers work to repurchase the shares that were initially shorted to the given institution. So institutions were buying shares where all these yellow dots are. And if institutions are buying shares, then market makers are selling the shares or shorting the shares to the institution. Then after a 60-day window, market makers start to repurchase those shares. So the first dark pool buying started showing up. You can't exactly see the date right now, but it was about, oh, here we go, 12/27, December 27th. And 60 days from there, moving forward, not January 27th, but to February 27th, we finally started seeing this rise in price. And the 60-day window from the first clusters of dark pool purchasing have now given GME a nice boost in price. And the market makers still have all the rest of these dark pool buy-ins to repurchase over the upcoming days/weeks. So the same thing here. Throughout the recent GME decline, there was a lot of dark pool purchasing. Then after the 60-day window, GME was able to make a nice move to the upside. And we saw the same thing here, etc. And over here, they're actually shorting, selling via dark pools during the rise in price. And then after the 60 days passed, we actually saw GME move down. So of course, yes, there are games being played via the dark pools, but currently things are looking bullish for GME with all this dark pool purchasing happening during the recent decline. Now, moving on from BOEX and the dark pools, we can see GME was able to make a really nice breakout above the daily trigger on Friday. Now, we saw multiple rejections of the daily trigger, 1, 2, 3, 4, 5, and then a long period of consolidation at the daily trigger. And when there's multiple rejections of a daily trigger and then price finally breaks through, just like we saw with Mara in recent times, where there was plenty of rejections against the daily trigger, then price was finally able to break through and make a really nice reaction to the upside. Now, Mara is a bit different because price is above its weekly and monthly triggers, so it's already more bullish. But nonetheless, the idea remains the same, where now that GME has broken above the daily trigger, we can expect strong upside. Now, GME also had a bullish trigger cross here, which in the past has always led to really nice moves from GME. Bullish trigger cross, price was able to move really nicely to the upside. Here, there was a bearish trigger cross, and price moved really down, pretty far down to the downside. Here we had a bullish trigger cross, and price was able to explode higher, etc. There's been plenty in the past as well. So overall, it seems to me that things are finally looking brighter for GME in terms of BOEX finding stability, in terms of dark pool purchasing needing to happen over the coming days and weeks, and in terms of the recent bullish trigger cross. The outlook to me looks extremely bullish currently for GME, not like we've seen in quite a while, but actually bullish, not just expecting a short pop to the upside followed by relentless shorting back down, but actual bullish behavior where we should be able to expect a nice rally coming to GME shortly. Best of luck, everybody. None of this is financial advice. I'm just sharing opinions and data-backed analysis on a stock that I've been tracking very closely for the past 3 years. If you would like to have daily updates and forecasts on GME, feel free to make a membership at memestockwatch.com. It is only $20 a month. Post data reports every night, forecasting stock movements, and a weekly forecast in the beginning of every week. So just to quickly pull up last week's weekly forecast, you can give it a quick read and see if it could have been useful to you. So here was last week's weekly forecast, where at the end of the day, we did see a large increase in put selling at the end of the week. Of course, we also had the stable BOEX, but the put selling right here in this column was the sign that price would most likely rise over the coming week. And therefore, when we ended the forecast, we said the options table is looking the most bullish here out of all the data prints, with a large increase in put selling while put buyers have closed out of their puts. Overall, even with the triggers and LDPM stacked in the most bearish orientation, there's enough bullish data here for me to offer a positive outlook for the week. Now, that being said, I'm completely uninterested in calls until price gets back above the 1414 level and the daily trigger. But once that did happen and price did break back above the daily trigger, I was able to make a really nice profit on calls. Now, the beginning of the week was Monday. Price was about 1350, and price ended up moving 11% to the upside. So I would say that would be a successful weekly forecast. All right, best of luck to you all. Hope you enjoyed the video. Hope you found it useful.